All right, guys, back to work tonight. It's Tuesday evening already, August the 17th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. If you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background. S&P's ready. Nasdaq's ready. Oh, the gold is always ready, isn't it? Got a bunch of great trades on our radar for tomorrow. Had some big moves on the charts. Got some ranges. Got some trends. Looking for some continuations, maybe some reversals. And we get some big news on the schedule coming tomorrow morning as well. So very excited for Wednesday's trading session. Before we jump in, though, and get our hands dirty on these charts, got a lot to cover in this video. Before we jump in tonight, though, make sure you subscribe to our YouTube channel. I publish this video with my best trade ideas every evening on this channel, so make sure you subscribe. Hit that little bell icon so you don't miss tomorrow night's video. And as always, if you guys have any questions, drop those questions in the comment section for me. I'd love to answer all your questions, and I really appreciate you guys tuning in every evening. If you enjoy this video as much as I enjoy making it for you guys every evening, do me a favor, hit that like button, that thumbs up here for me on this YouTube channel. So again, make sure you subscribe, hit that like button if you guys enjoy the video, and drop those questions in the comment section if you got it. But enough of the intro, though. Time is ticking. Wednesday is right around the corner. What do we got going on here for Wednesday's trading session? Well, a lot of big moves in the markets here this week. Had a nice big move down on the S&P. We get that big deep pullback. I would love to get short on this deep pullback off the S&P. We got a little bit of problem with the momentum right now, but we'll look for some short setups coming back down to retest the low. Would love to short this thing for another leg lower. I would definitely be easily convinced for reversal here as well. You can definitely see there's been a lot of momentum shifting for the buyers here. I'm going to go over why, though. Usually the underbelly of these ranges will make for excellent shots for another leg lower. But again, I wouldn't mind a reversal here on the S&P as well. So we'll talk sell side. We'll talk buy side trades for tomorrow. Nasdaq is very similar to the S&P here tonight. Nasdaq, of course, bearish into a trading range right now. We're trying to sell it and run this thing back down, right? Trying to sell this pop, and we're trying to finish off kind of a pendulum swing back in the opposite direction. Just like the S&P, though, I definitely will be keeping an eye out for some reversals as well. I'll talk about why I'm keeping my eyes on those reversals here as we go deeper into the video. But right now, looking for some short side setups on the Nasdaq. And then speaking of short side, over on the gold, of course, is rotating from off the high of that range. Got a nice big rotation target down here at 1777.8. I would love to short some pops right now on the gold. I'll tell you, unlike the S&P has plenty of room overhead. Nasdaq, plenty of space for a reversal, right? Which means we definitely want to have that on our radar for tomorrow. Gold does not have a lot of easy pickings up there for the buyers. The buyers do not have very much open space there on the gold right now. So we're definitely looking for the short side. And if we can, we'll thread the needle here up to that 1800 if the buyers can convince us. I'll talk about what it will take to get long here on the gold as we dig into tonight's video. So charts are all ready to go, as you can see here. S&P, Nasdaq, and gold. We're going to break down all of my favorite trades. By the end of this video tonight, you'll know my favorite price action setups for tomorrow. You'll also know some stuff to avoid to keep yourself out of trouble, whether you're trading on your own or you're trading with us every morning in the trade room. Now, speaking of every morning, let's make sure we check the calendar for tomorrow, because of course tomorrow is a Wednesday. Let's make sure we're all on the same page here so you know what to expect here for tomorrow. Now, of course, Wednesday morning, the big news of the day tomorrow is going to be those housing starts at 8:30 Eastern time. Probably not going to be the big market moving event that we hope it will be. Later this afternoon, later tomorrow afternoon, you get the FOMC meeting minutes at 2 p.m. Eastern time. These will definitely be the two big news reports on our radar for tomorrow. Honestly, I don't think either one of these news reports are going to be that big of a market moving event. If I had to guess, I would guess that FOMC meeting minute release tomorrow afternoon, probably a little bit more potentially packed with some action. But right now, I wouldn't expect these two news events to move things around too much much here for us. I would expect, though, what we've talked about a lot recently here over the summertime season, we've seen some of our best trades between about 9:35 and about 11 a.m. Eastern time in our trade room right now. It's a little bit slow at the beginning of the summertime days, right? So we've seen a little bit of sluggishness in the overnight session, but we've seen a lot of great setups, a lot of great movement between 9:35 and 11 o'clock in our trade room. So again, we get some big news tomorrow, 8:30 and 2 o'clock Eastern time. I hope that housing starts number gets us going here nice and early. But again, I wouldn't expect that to be a huge catalyst in the market. Maybe we'll see some surprises out of the FOMC meeting minutes. I don't think you're going to see any big market move off of that. But hey, I'm a trader. We're all traders, right? We'll trade whatever the market gives us. So if we do get a nice big reaction to that FOMC meeting minutes, I will definitely be looking for setups in the wake of that news report. But again, definitely make sure you're at your desk that hour and a half tomorrow morning, especially with us in the trade room at 8 o'clock Eastern time. Speaking of trade room tomorrow, again, don't forget, we get together every morning, 8 o'clock Eastern time. I would love to have you there trading right along with us at the opening bell. We open up at 8 o'clock every morning, Monday through Friday. I'll put all of the membership links below this video, either in a description of the YouTube video or on the website. I'll put a big button for you guys as well. And as I mentioned in last night's newsletter, I will not be publishing the video newsletter on Thursday evening. Unfortunately, I did have an unexpected death in the family on Sunday morning. The funeral is scheduled for Thursday afternoon. I've tried to rearrange things, but it's going to be a little bit difficult for me to get that newsletter posted for you guys on Thursday evening. I really hate to leave you guys hanging on Thursday evening, especially ahead of a Friday trading session, but sometimes life happens like this and you got to make some adjustments. So I will, of course, come back tomorrow night and we'll do our newsletter for tomorrow night, but just be aware there'll be no newsletter on Thursday evening ahead of Friday's trading session. Not to worry, I'll make it up to you guys next week when I get back to hopefully back to our full schedule here next week. So again, one more newsletter tomorrow night. We'll have Thursday night's newsletter off. Trust me, I would much rather be here with you guys than sitting in a church pew. All right, we got the S&P ready, Nasdaq ready, gold is ready as well. Don't forget, I'm going to put chapters at the bottom of this video. So after you watch the video all the way from start to the finish, you can go back and use those chapters to go back and revisit specific markets that you want to dig into as you're trading tomorrow morning. Let's start first with the S&P here right now. S&P 500, boy, what a reversal. You can definitely tell we're dealing with some summertime markets, right? That big move up and just evaporates, right, with that big move down here. One thing about summertime markets, they definitely are a little bit less consistent, right? Because there's lower participation. There aren't as many people participating this time of the year, right? Not to worry though, that pendulum will swing back in the opposite direction here that first week of September. Bottom line, what's the most important part of this chart right now? What are the most important components? The most important components right now is we had a bear market into a trading range. We then saw, as you can see, a very strong kind of lunchtime breakout. And now we get that deep, relatively strong pullback into what is really the kind of the underbelly, right? Or the base of that trading range. Most of the time, what will happen is you'll see a market that is bearish like this. They'll run down into that range. They'll spit out the other end. Now, usually what's going to happen is they're going to push lower. They're going to come back and they're going to sell, right? The underbelly or the base of that trading range. As you can see, they never did that, right? So they just ran this thing lower. So the odds are pretty good. They're going to see a lot of bears coming in here. Going to sell this thing back down, right, to retest that low. That is what I'll be looking for in the short term, is that move back down to retest a low and possibly another leg lower. Then there's some key targets waiting down around that 43.90, 43.95 area. As I mentioned in the introduction, though, I could easily be convinced otherwise to look for the long side, right? Because as I mentioned earlier, summertime markets, they do tend to be a little bit inconsistent. You could easily see how you could measure the amount below the range, put that above the range, and that easily takes out that all-time high. The big problem, again, we have right now, though, is generally speaking, most of the time, you're going to see bears coming in trying to use the underbelly of that range as resistance. If we can keep going higher, I definitely will be ready for the long side trades as well. well. So how do I short this market right now? What would be the best way to trade this as it goes higher, goes lower? Some price action trades I'm looking here for tomorrow. I'd love to short this thing back down again. My big problem, as you can see though, is this is a pretty strong pullback, right? You can definitely see we have a channel coming up off the low. I would say under normal conditions, if we didn't have that range and so conveniently right at that range low, I would say this is a 1, 2, 3 reversal, and I'd be looking to buy that pullback, right? But again, it's not that cut and dry. The underbelly of that range, again, is the giveaway. So I definitely do anticipate we're going to see a lot of buyers coming in and trying to pick my pocket on this. And to account for that, I'm going to use what I call a 2-try failure pattern to sell off this high. As the market pulls back, we start seeing buyers come in. I'd like to see the buyers try once. I'd like to see him try twice. And there are a couple different ways you can sell into this. One would be just simply to wait for those stops to get hit and just sell right into those stop losses. So again, you've got buyers trying once, buyers trying twice here, rope in all those bulls, and then simply short into those stop losses. A really effective way to do it. Another way, my favorite way between you and me, is to look for a trap off of that high. You can also draw a trend line off that low up around that high and really get your hands on a great entry off the high of that, almost like a new hidden channel right off of that high. So a couple different options to get into the trade short, but as you can see, the basic is pretty simple, right? Well, the buyers try twice and then look for that short going back down again. Now, let me back this thing out here because we oftentimes see a follow-up trade after these really deep pullbacks, and that is into a trap entry. So this, of course, would be what I call a 2-try failure, right? 2-try failure off the high into a trap. And the reason why you want to use a trap on that is because you don't want to get caught selling too low. And those trap setups are really be perfect to avoid that, right? Kind of that lack of open space as we go. Don't forget, if you can add a channel onto that low, onto that high, that will really make our odds even better. So, grab a look at that channel and show the top of that channel. That's one way I'm looking to sell this market as we go lower. Now, if the market just simply took off to the downside, I would still be looking for that trap, right? So if the market simply just, belly up, right, and rolls over here, right? If it just rolls over, I'm still going to be looking for that trap here. Effectively, it's pretty much the same basic idea. But the key is, if we do start making that strong run lower, I just don't want to chase after it. That's all. I want to wait for that trap, try to get short as high as I can, that way I can preserve a good risk-reward ratio. That's why traps are so valuable. Now, guys, speaking about trap patterns, right? Traps, failures. I'm going to talk a lot about failures, a lot about traps, a lot of different setups that you might not be familiar with. If you're watching for the first time tonight, not to worry. I cover all the price action setups, but most importantly, I cover the right situations to apply the price action setups. I cover all those smaller details in our quick start class. We have a great little shortcut course. I'll put a little link up there for you in the upper right hand corner. When you join that free trading class, you'll see hundreds of examples of situations like this, right? Where we see a big pullback, 1, 2, and then down in right into that trap, right? So, again, if you're here for the first time right now, or if you're still trying to get consistency in your price action trading, you're going to love that quick start class. It's a nice little shortcut course to bring you up to speed with all the right setups, but most importantly, the right situations, because that's what makes price action trading consistently successful, applying it in the right situations at the right time. Again, grab that link in the upper right hand corner. You'll love that free quick start class, bring you right up to speed. So now you get a pretty good idea of how I want to sell this market. How would I buy this thing? Oh, and one more thing too. Let's say, for example, we make that strong. Let's say, for example, we make a run lower. Let's say these bears come in and they hold the pullback off the moving average and jump, right? We get a jump. It'll look a lot like this. right? Where they come off the high, they hold the pullback, and they run lower. You see what happened back there? We call these 1, 2, 3 reversal patterns. I talked about this last night, obviously. Mark up that low, mark up that high, and see how they come right in and give you that nice little short off that new channel. That's exactly what I'll be looking for if we get something like that tomorrow. Right? So keep your eyes on that as well, right? So again, I would love to get that 1, 2 and back down again, right? But if we don't, right? If all we get is this kind of rocket ship back down, or maybe we do get that 1, 2 and then back down again. If the bears come in, they hold that pullback and they jump off the moving average, that is a 1, 2, 3 breakdown, 1, 2, 3 move, mark that low, mark that high, and then what I'll do is I'll drill down to a faster time frame. This is a 6,000 tick chart right now on the S&P 500. I'll drill down to a faster time frame, and my favorite, the two most common setups, the price action setups off the high of that channel are bull traps and buyer failures. Like I said earlier, I'm going to cover a lot of examples of those in that quick start class. So definitely make sure you grab that in the upper right hand corner. That is something I'm watching for as we go lower here. As we go higher, this is where we have to be a little bit patient here, because in all reality, we may see one more leg go up, take out these highs, and still get that 1, 2 back down again. There's a couple ways in which I can buy this. First of all, let's talk about that prior swing, because this prior swing is definitely where you would imagine you're going to have some buyers, right, coming in. The problem is, as I mentioned before, again, I'm very suspicious of the underbelly of this range right now. I like the idea of a trap, but the fact that it's running right into that range, it definitely makes me a bit concerned. So how do I buy this? What if I still want to buy this? If you still want to buy this, what I'll do is look for the bears try once, the bears try twice, and look for what I call a nested trap. It's basically a trap instead of a trap. We see a lot of these nested entries, right? They're basically entries inside of larger patterns, right? The markets are fractal, and so a larger pattern, right, like this one, can be broken down into a smaller pattern. That's the way I'll be looking to buy this thing. If there's hold, and then of course bears try once, bears try twice, still a very, very good trade. But again, a little more patient because of the anticipation of this run going lower here. And then they could really make it easy on us if this market was to keep going, right? A couple things you want to think about if the market rolls higher here. First of all, if the buyers simply hold this and run, what does that tell us? It now tells us there's a big bullseye right on those all-time highs. Again, as I mentioned earlier, there's going to be a pendulum swing coming off that low. It's really easy to see that all-time high here. So if we do see this market, if I get rid of this channel here, right, for a moment here, if the market simply makes a strong run higher, kind of the basic idea is mark up that high, find that channel, and then again, drill down, right? I'm not going to trade this stuff off a 6,000 tick chart. Drill down and find those, again, the price action trades I talk about in the quick start class, the failures, the traps, the pullback combinations, right, coming off of that low. I'm not going to go into all those details here tonight, but again, you'll learn those in that quick start course in the upper right-hand corner. Again, target at that point now will be back up to retest those major highs. Another trade I'm watching here as we go higher would be very similar to what we talked about before, right? A two-try trap. So strong move up, a shallow pullback, a higher high in price. That is definitely going to be a trap to be looking for here. And then as always, if you can combine this off the high or the low of a channel in this case, right, even better, right? Even better. So think about that, right? As the market punches higher, we see that shallow pullback, that higher high in price, and of course that trap low, right? At that point now, the gig is up. There's a lot of momentum going higher, right? Buyers will be looking for, right, that trap entry off of that low. And again, remember, keep in mind too, if we just simply jump off this low here, you definitely want to keep an eye on that new channel, drill down to that faster time frame, and we'll find the entries off of that low, try to trade that rotation right back up to retest the high. Now, the one thing we do want to keep in mind is that trading range. So for example, let's say we went back up into that range and began going sideways here once again. If that happens tomorrow and we start going sideways sideways inside that range. Now all you do is find a level of support underneath that trading range and apply those levels of support, right, with a failure pattern. So failure patterns are best at support levels below the range. And then remember, we almost always see that rotation back in the other direction, and I can grab that new channel and buy that first pullback, right? So think about that way too. If we keep going higher, but we don't quite break, and really run going higher, watch that new channel, watch that trading range. If we do stick in that range for a while, it'll be a bull bias into a trading range, which means find levels of support below the range. I'll talk more about that tomorrow in the trade room. We're going to find those seller failure patterns, and then again, we'll drill down to a faster time frame and grab the entry off the low of that new bull channel, right? Remember to mark up your pendulum, mark the low, mark the high. That will tell you where that next objective is. And again, we'll fill in those blanks tomorrow morning once we get our hands on this tomorrow in the trade room. But now at least we have a good idea here of how to trade it going long, how to trade it going short. Again, as I mentioned earlier here, we really got to be careful getting long right now until we can see either some momentum for the bulls confirming or we see these bears failing on the next pullback. Let's keep going. S&P looks pretty good. How about some Nasdaq here? Now, Nasdaq is relatively similar to the S&P 500. It is kind of the same idea. It's a bear market. As you can see, this is definitely not a bull market right now. And ultimately what we have here is the most important kind of components on this is we do have a bear market. So I do want to be a seller at resistance. And you can certainly see there's a range maybe not certainly, but there is a range brewing in the middle, right? So bear market into a trading range. Now, as I mentioned before, we can take the amount below that range, we can project that above the range, and that creates an area of resistance. And sure enough, you can see exactly where we are right now. The sellers right now, they want to complete their pendulum swing. They want to complete their rotation back down to retest the low, right? Ranges are balanced markets. So when a bear market goes lower into that trading range, we run lower and then pop back up now. I've got levels of resistance above the range, right? Remember what I said earlier, when you have a bear market into a trading range, right? We were talking about a bull market on the S&P. This is a bear market into a trading range. So you find those levels of resistance above the range, and then we combine those resistance levels, right, with our short setups to bring it right back down again. Now, of course, at the same time, like I mentioned earlier, I would be easily convinced of a reversal because this definitely has the potential for a reversal. In my trade room, we always say broken pendulum, broken range. So we do see these quite a bit, especially in the summertime months where we got a little bit lower volume. We may see it roll lower and then have it just punch higher, right? And once it breaks through that pendulum swing up there, momentum starts to build, right? We start looking at the long side of this market. So how do we trade this right now? I think the biggest obstacle is definitely going to be this rising support trend line. This rising support trend line is kind of standing right in the way here, as you can see, for these sellers. So really the ultimate goal here would be either to get underneath that trend line and come back and use it as resistance. That's one way to do it. Or I have to wait for the price to break down on strength and then grab a trap right above a prior swing. That's the one that we have to be careful with because we have to wait for some real good momentum, right, going lower there. Those are the two ways I'm looking to short this market, right, as we go back up or back down, right, to retest the low. If the bears can get their hooks in this thing, if the sellers get their hooks in this thing, I've got that 14,869, right? Got a bunch of levels down below us. The big level here for the bears right now is 14,774 and a quarter. So if the bears have their way tomorrow, that is definitely where I'll be looking for that next leg lower here for those sellers. But again, we got to wait for the proper entry pattern here as we go. So one way to do it is to use this as what we call a two-legged pullback and basically get down underneath it, come back up, nice strong signal candle coming off that trend line as resistance. That'll be nice. We call these two-legged pullbacks, right? One leg, two leg underneath and short, going back down in. Nice little two-legged pullback going lower. Or again, if we do see a strong run lower, think about that trap entry on the way back to retest those lows. Right? That trap entry should be pretty easy here if we get that strong move down there on the way back to those lows, right? That trap above those highs. And again, I cover a lot more about traps and two-legged pullbacks in that quick start class that I mentioned earlier. That will be an easy way to short this. You could also see too, let's say for example, the market simply goes lower, just like on the S&P, right? They pull back, they jump off the moving average. If we get that 1-2 jump off the moving average, now we know no matter where we are, we got a lot of momentum on our hands. So I'll mark that low, I'll mark that high, and as always, I'll drill down to a faster time frame, right? And short off that high. Again, this is a 4,000 tick chart on the Nasdaq. I wouldn't dream of day trading off the Nasdaq with a 4,000 tick chart. That is way too slow. Your stop would be way too large here. You definitely could, but it would be a very expensive trade there. I'll drill down to a much faster time frame, and I cover all the chart time frames you guys need in the quick start class. We'll grab those buyer failures, we'll grab those bull traps, those seller pullbacks, and short off the high of that channel. Again, I've got some big targets here at 14, 849, and again that next big objective at 14,774, right? Think about those major lows here for our next objectives as we go lower here. And then as we go higher, the most important thing about price going higher is we have to get some separation away from the moving average. You know, I say that because it would make a lot of sense if we went up, came right back down again and got that short, right? So that wouldn't surprise me whatsoever. What we're going to have to get right now is get some sort of lift off, right, from this moving average to suggest that this market is turned. And again, I wouldn't put it past these buyers right now. The way this market has been moving the last couple days, relatively low volume because of the third week of August. So we definitely can't count out the buyers right now. What I'll be looking for as we go higher would be either a move up, a pullback, and go, right? What do we call these? We call these 1, 2, 3 reversals, right? Mark up that high, mark up that low, drill down to a faster time frame, right? And we're buying off that low. Again, I'm not going to go over the exact time frames. I'm not going to cover all the price action setups, but I do cover all that stuff in that quick start class. So make sure you grab that if you want more details on the specific entries. Or we may see this market really take off to the upside. We may get that shallow pullback, that higher high, and that's exactly where you look for those traps. Now, this trap setup, I'm simply drawing it right here. It could be a little bit higher, right? It may really run in the overnight, like we saw, in the overnight yesterday. Real big run higher, right? Shallow pullback, higher high in price. That trap will definitely be on our radar there. Where do the buyers want to go right now? The buyers would love to get back up, take out that weekend gap, at the very least, right? Get back up and retest those highs around that 140. If things really get good, right, the all-time high is right above it. So we definitely have plenty of space here for the buyers. We just have to get the momentum back in their favor right now. And again, I can't emphasize enough, be very careful getting aggressive here. If we go up and come right back down again, we will be looking for those shorts off the underbelly there. We will be looking for that move up, and then again, those traps, right, as we come down here. So don't be fooled by a pop off this, up higher here. If the pop does, though, hold that pullback and give us some proof of those 1, 2, 3 reversals, then I can definitely mark that high, mark that low, and I can now get serious about buying that pullback. Just don't trust those big pops off the low right now until they can hold that pullback, or right until they can get that big pop, that higher high, right, that higher low, and then we can start looking for those traps right from there. But we got to wait for that pattern, right, to get it first. The easier side right now is the short side. Just make sure, again, you watch out for that rising support trend line. And then I think the only other variable right now is if we end up going sideways inside this range, right? So if we were to sit here for a while and go sideways, that is exactly when you want to watch that trend line overhead. And what I'll do in that situation is I'll wait for the pop up into that trend line. I'll look for that failure, right? That buyer failure. Remember, in this case, it's a bear environment. In a range, we're looking for resistance, right, above that trading range, just like we have, right, that trend line there. So again, a failure off of that high. And don't forget, we oftentimes will see the market, if we go sideways here for a while, we do oftentimes get that combination, right? So moving average comes over, starts going sideways. We pop back up into resistance. The buyers, of course, can't resist it. They buy into those, right, into that pullback. We know their stops are sitting right below that low, and we're now able to sell into those stop losses. If we can see a strong move down from there, right? Again, it's a failure pattern off resistance above the high of a bear trading range. If we can get that failure pattern, then we can mark up that low, we can mark up that high, and again, we can drill down to a faster time frame and find that entry off the high of that channel. Remember, the two most common patterns there will be bull traps, buyer failures, and then into those pullback setups as we rotate back off the moving average again. Again, we'll cover all those details in the quick start class, and tomorrow, of course, we'll do it together in our trade room. So definitely keep that, right? Keep it in mind here if we do go sideways here tomorrow. I'm sure there are a couple things I probably missed on this. The markets love to throw curveballs right now, so definitely make sure you come out and join us every day this week in the trade room, and I'll make sure you're on the ball no matter what we get in the price action. Last but not least here right now, over on the gold. Gold is somewhat similar to the Nasdaq here in the sense that it's kind of a bear market right now with a range right in the middle. The most important factor on this chart right now is we still have that range that we had from last night's video. And as you can see here, let me clean this thing up a little bit, right? As you can see what's going on right now, we had a nice, big, strong bull market into a range to finish the day yesterday. The market ran up. The buyers tried once. The buyers tried twice, right? Like I said earlier, draw that trend line, draw that channel right, and they shorted it back down again. This is the same pattern I talked about on the S&P 500, right? Same thing we talked about on the Emini S&P. So that's the idea, right? We sold off that high, right? Off that high of that trading range using that two-try failure. Now we've got that rotation going lower. And so now, like I just mentioned on the Nasdaq, if we draw these channels, right, this channel doesn't fit very well. If we draw these channels now, we can now not only grab the reversal off the high, but now trade that rotation, right? Trade that rotation. And that's the general idea right now on the gold, right? The buyers have failed. We're running back lower. We're finding some new levels of resistance overhead, and we're trying to short those levels of resistance. I really like that triangle top, that kind of expanding triangle down here. That would be a great place to short off those highs as well. As you can see, though, we didn't really get a lot out of this channel, right? There's not a lot we can do right out of this one because you're right inside that trading range, right? So I really like this channel a lot. Mark up those lows up around that high. This one really looks pretty good, right? That channel looks pretty good there. Now all we need is it to pop off that high, off that low, and we can sell this thing back down again. So again, the general idea here is to trade that rotation, right? Complete that pendulum swing back in the opposite direction. And oftentimes what happens is the pendulum swings, but they can't contain it, and the market keeps on going, right? That could easily lead into a full pendulum swing reversal, a pendulum swing breakout, and take out these lows here around that 1772 here for tomorrow. So how do we sell this thing? How do we buy it? Well, as I mentioned earlier, the buyers don't have a lot of open space right now, right? As we go higher, I'm looking to short that trend line. As we go higher, looking to short that trend line. That puts us right up into those highs up there. So not going to be an easy road here for the buyers right now. The easier path is the sell side. I would love to get this. It would be a great looking trap high on this if we had a little bit better channel to use here right now, but we really don't. Again, the better channel is this big one I have drawn up here. So trap is probably not going to be very effective above that high. You can try to take that trap, but it really doesn't solve the problem of getting in at resistance above the top of that range. That's the big thing, right? You want to be in at resistance above the high of that trading range. So as we go higher here, we're going to have to wait for those buyers to come in, right? Try to get long. We can sell into those stop losses. If the market really starts to run, I can mark up that low, mark up that high, drill down to a faster time frame, right? This is a 1500 tick chart right now on the gold. I am not going to trade the 1500 tick chart tomorrow in the trade room. I will drill down to a faster time frame, find those buyer failures. Now in this one, you're not going to need a 2-try failure, right? Like back up here, right? Remember, that was a very bull market, right? So once they make that high, buyers once, buyers twice, right? That's what you want to look for in a reversal environment. In this example now, this is a very bear market at this point, so all we need is that buyer failure up at resistance above the high of that range, and then of course we'll drill down to the faster time frame. We'll grab our bull traps, we'll grab our buyer failures, our pullback combination setups, and try to complete that pendulum swing going lower. And you know, honestly, we may end up seeing this market again. It may really run, right? It may really run. So keep your eyes on, you know, for example, right, we may see something like this where we get that push up, the buyers come in, they try to get long, right? They fail. We're able to sell into stops. We get that strong run down, right? Combine it now with that new hidden channel, right? Sell up the high of that channel. And then as we run lower, it may really pick up steam. Again, we see a lot of these pendulum swing reversals like this, and we may see a 2-try trap on the other side, right? There's no reason why that pendulum can't just be taken out, right, and run, again, because you have all of that momentum now coming off of that high here. So as you can see, right, a buyer failure, a seller pullback, and again, it won't be only a pullback entry off that high. It'll on a faster time frame, it'll be a bull trap, a buyer failure, right, and a seller pullback there. And then of course that 2-try trap pattern. All three of these, by the way, I have hundreds, probably hundreds at this point, of examples of these price action setups and how we apply these to our favorite markets. They're all covered in that quick start class. So hopefully by now you've grabbed that link in the upper right hand corner. That will be some easy pickings here as we go lower. Now, if we do make a run all the way up to that trend line, this would probably be the best place to sell short, right? Because you can see we're right at that major high. Again, we're at resistance above the top of that trading range. What's the problem though? Yeah, the problem at that point is it's a great place to get short. It's just we have a lot of momentum now for the bulls. We call this rotation off the low, right? When I go up to resistance above the high, I have to just kind of think about what does momentum feel like. And in this example, if we do end up all the way back at that big trend line overhead, that momentum will be a lot stronger than I'd like it to be. And so really just about here, right? Just like we're talking about on the S&P 500 right now, right? Where let the buyers try once, let them try twice. Again, bunch of different ways you can short this. Again, on a faster time frame, right? Not this 1500 tick chart. We'll drill down to a faster time frame. I've got my stops, right? Waiting right below that low. I can sell right into those stop losses, right? I can sell into those stops. One of my favorite techniques is to grab that trap, right, above that high, or that channel, right, off of that high, right? So we're selling as we go. And then again, if it really collapses and runs lower, now mark up that low, mark up that high, drill down to your faster time frame, right, and grab that short, right? Again, bull traps, buyer failures off the high, and you know where that target is, right? That pendulum swing on the side. And again, we may end up seeing it continue to go lower here, take out those lows. So watch that 2-try trap entry if this thing really starts to accelerate, right, going lower. Hope that makes sense. If it doesn't, drop those questions for me in the comment section below. Now, how do we buy this market? Right? What's the plan here to buy this thing? Well, if the price goes lower, we really have to be careful, right? Because if the price goes lower here, remember, if the price goes lower, all of that momentum, right? All that momentum. So as we run lower here and complete that pendulum swing, you know that bears are going to be trying to come in and grab that trap. So if we go lower and take out that pendulum swing, what you'll want to do is let the bears try twice, right? Let them try once, let them try twice, and then take those stops out and literally buy into those stop losses. So you could definitely do that. Again, the range is the magnet. Will we be at a support level below the range? So that definitely does work. It's just, again, you get a lot of momentum. What would probably be the safer bet if the market runs lower is to wait for that pop up, a double bottom off that low, and then bears once, bears twice, and go from there. That would be the safest way to do it, because that way you're not trying to step in front of that freight train, right? Let it roll lower. Let those bears come in and sell short, right? They're going to probably get at the very least a retest of that low. And then once they do, rope them in. Bears once, bears twice, and then punch it going back up into that trading range, right? The bottom line, though, is you got to get 2 tries for these bears down in this area before you can even think about, right, being being a buyer. And again, be careful, because something like this is likely going to be waiting as we make that run lower, right? That 2-try trap, find that channel. You know what I mean? Stuff like that is going to be hidden under the surface there. So just be careful trying to buy off of that low. As we go higher here, how do I buy off? How do I buy going higher? We would need a lot of strength, right? A lot of strength. So a big, strong push up, right? Shallow pullback, higher high in price, and a trap out here. I'll be honest, though, this does not seem to be the easiest trade to justify right now, right? It'd be a whole lot easier to wait for that price to take out that high, buyers once, buyers twice, and short the sucker back down. I think one of the key components will be, if we can get that strong move up, can the buyers actually hold that pullback and jump? It'll probably be off the top of that channel. We see a lot of times reversals will kind of dig into the top or the bottom of the channel going in the opposite direction. So if we do see that 1, 2, and then jump off the moving average, remember, it doesn't matter how strong the initial leg is, right? The first leg can be very, very strong. They have to hold that pullback and go for us to take that thing seriously. So if they can hold that pullback and go, then great, sounds good. Now we can actually use that trend line and combine that trend line along with our new channel, right? Find that new channel, drill down to a faster time frame. And these are one of those times where I really don't care where I am. If I have enough momentum with that 1, 2, 3 move, and I have a good entry set up, coming off a good location like the low of that channel, I really don't care where I am. I would like to have a lot of space overhead, but one thing I've learned over the last 10 years of trading is, if you have enough momentum, if you're at a good level, in this case, of support, and you get a good price action set up, take that darn trade. Even if maybe you only go half size on it, right? If you're worried about, buying right into those highs here. But again, that's something watching here for tomorrow, right? That 1, 2, 3 move, right? And then, of course, drill down, faster time frame, and grab the entry there. Where's that next target from there going to be? It's all the way up at 1813, so there's plenty of space overhead if these buyers can grab control here. But again, right now, though, got to respect the bears until something changes or until we see some exhaustion, right? Those 2-try failures, and go higher here. All right, guys, as I mentioned earlier, I'm sure there'll be some curveball I did anticipate here as we go into Wednesday's trading session. So make sure you come out and join us every morning at the opening bell. It is so much easier to trade when you're doing it with me rather than going out there and doing it on your own, right? I really struggled for the first few years of my career. It wasn't until I began working with more experienced traders that I was finally able to get the consistency in my trading that I know we all want. So make sure you grab that link, the description of the YouTube video. Get registered as a brand new member. Call the office if you guys have any questions along the way. I've got live chat on the left, live chat on the right. I got a big, obviously the comment section can also work for questions as well. But again, don't be a stranger. You can register right on the website or simply call the office, and I'm more than happy to walk you through the entire process so you're ready for tomorrow or any day here this week. Guys and gals, hope you learned a bunch from this video. Hope I'll see you tomorrow at 8 o'clock Eastern Time in our trade room. If not, you better come out and see me tomorrow night. We'll wrap up the week tomorrow night with the last edition of our newsletter. Again, I will be unavailable out of the office on Thursday afternoon, unfortunately. So no video newsletter on Thursday. We'll come back tomorrow, though. We'll see you guys then. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.